Well, hi there, everyone, and welcome. Today is Wednesday, September 24th, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. My name is Raleigh White. I'm coming to you live from a cloudy, overcast day here in Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger's going to be covering a range of important topics with a focus on trading option spreads. Specifically, he's going to be talking about the difference between debit and credit spreads. He's going to be talking about strikes, expirations, ratio of gain versus risk. He's also going to share the big key that most traders miss when trading credit spreads. He's going to share with us the favorite setup to combine with credit and debit spreads. This is something that Roger likes to do uniquely, and he's going to give us examples of debit and credit spreads on your favorite stocks. He's also going to dip into the mailbag, and he's going to share with us how to trade small caps. That's one of the most frequently asked questions that we get is that, Roger, I see your watch list. How am I supposed to trade these things? Now, if you've got questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. Now, remember, folks, that the chat is open to everyone, so remember the ground rules. Be kind, keep to the topic, no political discussions at all. Please keep your side conversations to a minimum so the rest of us can focus on the education and information that Roger is sharing, because after all, folks, he's here to give us an edge and to help us all become more confident and consistent in our trading activity. Now, if you were with us this morning at 8 o'clock for Roger's pre-market show, he shared with us, the small caps that are currently on his watch list, and you can see that on the screen here. AXMS, if it's trading above 1180, XPON, if it's trading above 230, CYCN, if it's trading above 540. Now, looking at the charts right now, none of these stocks are even close to those levels, so I don't see any entries at this point in time, and there may not be anything at all today. Remember, Roger's selection process is based on price action and extreme volume, okay, folks? He wants to see incredible volume before pre-market, before considering. Always remember that small caps are not market dependent. They're not driven or impacted by the same things that large caps are, because there's no institutional money at all in small caps. It's all coming from individual retailers, traders like ourselves. And also remember that on these particular small caps, only trade them during normal market hours. And if you don't see an entry before 2 p.m., just forget about it and never hold any of these small cap trades overnight. Now, as far as Roger's catalysts for today are concerned, and once again, you'll see those on the screen. And remember, a catalyst is information that is already known or will be known, but it's not yet priced into the market. So as far as Fed data is concerned, we knew that new home sales data was coming out, and it was impressive. It showed about 800,000 new homes being sold on an annual basis. So it was up significantly over forecast. We also expected petroleum inventory to be released today. So those are a couple things to keep our eyes on, kind of minor, but those were the key Fed catalysts. As far as chips are concerned, once again, that sector driven by Micron was up 1% pre-market. On Infotech, we saw that BABA was up a whopping 9% and now was up 2%. On the retail side, Amazon was up 1% after an upgrade earlier pre-market. And in business services, CTAS, was scheduled to report before the market opened. So those were our catalysts for today. Now, as far as Roger's pre-market stock watch list is concerned, once again, you can see that right here on the screen. He was looking at several shorts and also several long opportunities. And his caveat here is this. Well, first of all, all of these, none of the stocks that you see here are overextended. We had a long discussion about what overextended means yesterday during the VIP session. So these are not overextended. But that being said, all that being said, remember, if you're looking to short any of the stocks or go long on any of these, be absolutely sure that they're in a solid downward move or upward move before considering entering those trades. And finally, Roger's pre-market closing comments. Roger continues to be very concerned about the market. As a matter of fact, quote unquote, he smells a rat. Why? Because few stocks, a handful of stocks, are responsible for driving the market, and they are overextended. He saw that, in pre-market that the VIX was inching higher, the bonds were moving lower. These are not, technical indicators that support the potential for a move higher. He also noted that yesterday's sell-off in the Mag 7, with Amazon and Nvidia leaving the way lower, did not see that money flow into the broader market, specifically QQQE or ISP or RSP. They just remain relatively flat. So what does Roger want to see? He's hoping to see a cool off in tech that is a healthy correction. We're not talking about a market crash here, but a healthy correction back to the 15-day moving average before potentially solidly getting behind any move higher in the market. So once again, we have a ton of people coming into the room. We're excited about today's presentation. The focus today is going to be on trading option spreads. Roger's going to be talking about the difference between credit and debit spreads. He's going to be talking about strikes, expiratios, ratio of gain versus risk. He's going to be sharing the number one big key that most traders miss when they're trading credit spreads. He's also going to share his favorite setup to combine with credit and debit spreads. And this is something unique that Roger does. Very, very unique. So you're going to love that one. And he's also going to give us some examples of debit and credit spread setups on your favorite stocks. And then he's also going to reach into the mailbag and he's going to spend some time talking with us a little bit about how to trade these small caps, because he always opens the morning session talking about small cap opportunities. And a lot of people are saying, well, that's great, Roger. I see where to get into it, but how do I manage that trade? What's my profit target? Things of that nature. He's going to be sharing, a lot of information on exactly how to do that. He's also, once again, coming back, why now, talking more about credit spreads, because in his opinion, most of you kind of get it, but he wants to make sure that you all absolutely get it and understand what the difference between debit and credit spreads are and how to set them up. Or let's put it this way, how to set them up the way Roger likes to do it. And finally, folks, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. And remember that the chat is open to everyone and we do have a few ground rules. Be kind, keep the topic, no political discussions whatsoever. Keep your side conversations to a minimum so that the rest of us can focus on the education and information that Roger's sharing, because after all, folks, he's here to give us an edge and to help us all become more confident and consistent in our trading activities. And with that, wow, let's say hi to the folks that are here. I know that we have Matt is with us here. I know that we have Kane with us, which is always a treat. Now, Kane, I hope you're doing well. We're all aware of the fact that you've been fighting some nasty germs.
Hey, thank you. Thank you, Raleigh. I am feeling much better, just not as high energy as normal, which might sound imposing because I'm not normally, at least I don't come off high energy. But during my day, I'm actually, yes, I'm very active and very, very high energy. I'm just a little bit slower today. I'm getting back there.
Well, that's great. Well, Roger told us on Monday that you were under the weather, and the outpouring of well wishing was overwhelming. So once again,
Ah,
we're all delighted to see you here, and I know
thank you.
Roger's excited to have you here because once again, today, is going to be a focus on credit and debit spreads. And as I mentioned a little bit in the pre-open, Roger had mentioned during this morning session that he's just a little concerned that not everybody really quite gets it. and he wants to be absolutely sure that people get it. And he's also excited to have you here because of your perspective on trading credit and debit spreads. So I know that he's excited to have you here so that we can cover this. And I know people are pretty jacked up about this. But as far as the markets are concerned, Roger's closing comments today was that he's concerned, Kane. He's just like, a few stocks are holding up the market, but the bonds are drifting lower. The VIX is kind of creeping higher a little bit. Money coming out of the mags after the sell-off yesterday was not going into, the RSP or the QQQE. And so he's kind of going like, I smell a rat. I smell a rat. That's what he said. So anyway, but not that the sky is falling. I think, Roger, if I quote you correctly, you're going, look, this is going to sort itself out over the next 2 to 3 weeks. And I know what you're hoping for. You're hoping for a cooling, back to normalcy, see things kind of drift back maybe into the 15-day EMA, and then let's establish that as a consolidation point and move on from there. I hope I did a good job of encapsulating what you've been talking about. And once again, let me turn it over to you guys. It's great to have you here.
Thank you so much. Yeah, I might as well just let you continue. You're doing a great job here. That's exactly. Hey, Kane, good to see you. I'm glad you're feeling. I'm glad you're on this side of the fence.
Yeah, me too. Thank you.
Yeah. Get better. Drink a lot of orange juice and stuff. So, as far as the market now, look, folks, I'm just going to be very straight up with you. If anybody is surprised at what you're seeing at all, then you honestly have not been watching any of my shows for the last 2 or 3 days, or like 4 or 5 days, because I've said this probably I don't know 100 times and I'll just be very fast. There shouldn't be any surprises here. It should be like, Roger, you've been right on this. Look at the mags. Remember Monday what I said? This can't continue. This is illegal. This is against the law. This is not right. This is not normalcy. We haven't seen that here. I don't want to go through it again for the 150th time. And I'm not going to say, I hate to say I told you so, because boy, oh boy, I did that too many times here. But here we are. There we are. Now, am I prepared for a lot of beating? Let me explain my beef to you. I'm going to explain to you my beef so you guys can see why I think what I think. Yeah, I've been telling that there's no surprises here. Yeah. If anybody's coming here going, what? You never said that? No, you guys haven't been watching me. So it's interesting because energy's up a lot, quite a bit, but the rest, and folks, I just want you to know, this is not real strong selling pressure. What you're seeing, the real strong selling pressure is right here. And you know what this is called? That's called the Magnificent Seven and QQQ and those large cap stocks. So just to show you, how did we see this coming? Because it's one thing saying, well, I saw it. Here were the clues. The bond market started selling off after this bar right here. That was number one. And we haven't been able to recover. Remember, this is what caused that big upside in stocks right here. By the way, do you see how inefficient the markets are? Do you see how many days after the bonds dropped, the stocks started coming down? Do you see how long we've been talking about this now for 1, 2, 3, 4, 5 days? This is now the second day it's happening in the market. So when people ask me, are markets efficient? Yes and no. They're efficient in the long term. In the short term, they're not. So the clues, what told us this was happening? Bond market, number one. Number two, the fact that mags started getting above the 1.5 standard deviation. I keep saying standard deviation. It's not standard deviation. It's ATR. So it's not standard deviation, but it's just the volatility levels, volatility range, way above normal. This is not normal. Look back here. You could see. You don't have to trust me. Just look with your own eyes. Look what happens when we come here. We pop it again. Not the first time we're talking about this. Strike two. What else was I looking at? I wasn't looking at John pictures of cats, although that's very useful. I love his pictures of cats. He sends me pictures all the time. Here, number two, the number last week and this week, the number of stocks making 20-day highs, which is now at 145. Where were we before? 168. Before that, 292. Before that, 233. 347. I went back like on Monday, a month back, clicking here for a month, showing you that every time we've been getting to the 347s. Number four, every time I've been coming here in the morning, I've been saying, guys, look at this. This is not sustainable. This is not sustainable. This is not sustainable. This is not sustainable. Every other stock is penetrating that level. It's not sustainable. Moreover, what else was a big clue? I'm giving you all the clues right now so you could see. And this is the last one, actually. And by the way, everything we're covering right now, we spend an hour talking about in the morning show every single day. Right. And then right here, this. What have I been telling you? Oh, there's one more. I'm sorry, I forgot the old QQQ in the banana tailpipe. The old RSP flat, and QQQE erase. As soon as they went up here, the minute they went up here, they've been erasing this thing. There's nothing that I just said that I have not been saying for 4 days straight, minimum 4 days straight, minimum of 4 days straight. Okay. It's called the pre-market must watch. Okay. And I've been telling you for about 3 weeks now that the number of stocks in the NASDAQ 100, the biggest 100 tech stocks, is starting to, it's vulnerable. Now, notice it's interesting. We have how many people here? 420 now. And then how many we have on YouTube? 55. Not one person is saying that I did not say this. That's a good sign right there. Okay, and as you could see right now, look where the meat of the move is. Technology down over 1%. Communication down, this is Meta right here. This is Meta right here. Meta, this is Amazon right here. Anyway, Google and all that. So my point is, with the mega caps are getting ahead of themselves. And the bond market, if the bond market breaks this level right here, 88.64, we may go a little lower. So as of right now, why did we not short the SPY this morning? Because that's not how we play, Ron. And by the way, we did take a trade this morning in Trading Zone Live, and it was a long trade, scalp, and it made money. We don't go against the trend. That's why, Ron, because we never trade against the trend. Trading against the trend is very dangerous. Okay, we only go in the direction of the trend. That's why. I said, watch the VIX, God knows what, everything I've been saying, but I've been very consistent in what I've been saying. And I've been saying it every day now for 4 days, every single day. So this is a problem. So the question is, okay, Roger, fine. Okay, you obviously got this market timing thing down to a science, but where do we go from here? Well, we're now violating the 8-day EMA. That's a red flag, okay? Remember what I told you a few days ago? We can actually come here because we're really overbought. We're really overextended. So I think if MAGs decide to come here, and I drew this line for you 3 days ago to tell you where exactly they should go, this is the 8-day. They should be coming down here. I want them back here. This is where I want my mega caps to go. Come on, Tesla. Come on, Microsoft. Come on, and come on right here. And don't say I didn't draw this line a while back, because I did. You saw it this morning, 4 hours ago, and it was there yesterday as well. So here's my new Picasso. You know what? Heck with it. I'm going to draw a Picasso. How about we do a Picasso drawing? Right here. I know a lot of people like my Picassos. X marks the spot. Here, I'll post it on Telegram right now. My Picassos are, if you trade my Picassos, they may actually be able to buy you a Picasso one day. Yes. All right. Here we go. New. Raleigh, did you see the Clyde this morning? I mean, this afternoon, what he's doing right now?
No.
You haven't seen him? Oh my God. No. He's hiding. He's hiding.
I love that.
Clyde is hiding. He's scared. He's been telling me the market's going to go down last few days. He's taking cover.
And is that bubble wrap? Or some kind of
yeah? Cats love boxes. He's chilling in his box. Not my Persians, but my Scottish folds. Him and and Mia, they love boxes. You put a box, that's it.
He's
Yeah,
got that nothing to see here look on his face.
yeah. He's like, we're going down here, guys. We're going down here. So X marks the spot. Now, okay, Roger, that's pretty scary stuff. So what's the silver lining? The silver lining is this: RSP isn't really going anywhere. Here, let me. I mean, it's not really going anywhere. QQQE, it'll come down here maybe, but not seeing a big fall. This needs to fall right here, and this will take obviously QQQ with it. So there's two scenarios. We either bottom out near the 815 around here and start going up later today, or we're going to go down. Now, there's something else I told you this morning. Do you remember what I said about the VIX yesterday and today? I said something very important.
You bet.
And I used the number 17, and I told you guys to take, not cover, but to take notes. Sorry, I'm in a good mood today. I'm in a good mood. I got Kane here. I got Raleigh here. I'm in a good mood.
You got Matt. You got the whole team.
Yeah,
man.
everybody. Matt's here. We took a little profit this morning in the pit on a stock we just gave.
Trading Zone Live too. Yeah.
Yeah, Trading Zone Live. We took a profit. It's been a good morning. Okay, remember what I said? If it goes above 17, there's a good chance that it's going to hit 20. If our drawing continues going our way, my prediction will happen. I will promise you that if this goes to here, then VIX will go to 20. How about that? Let's just make a little oral prediction on that, okay? Verbal prediction on that. Thanks, John. Yeah, he's very frisky, Murray. He's very frisky. He's taking cover today. He's taking cover. All right. Hopefully, Volt is bottoming out here. And folks, I'm not taking pleasure in the fact that the market's doing this. What I'm taking pleasure in is the fact that the market really needs this. Like, really, really needs this. So we can get some of this. Because it just can't. See, the market's been doing this. That's what we need rhythm. We need rhythm to the market. This gives us some rhythm. It puts some energy into the market. Because, trust me, this is good for the market. This is good for swings. It'll give us a lot more opportunities. And I'm not seeing any like dark clouds on the horizon or anything like that. I'm just seeing a nice, healthy, like a pullback that's been coming for 4 or 5 days. Okay. All right. So there's a couple of things I want to talk to you guys about, and Kane and I will do a class, but I want to talk to you guys about this first. And also, semiconductors are leading the sell-off. Semiconductors are the most speculative tech sector, and they're the most commoditized, and they have the most market cap. So there's definitely something there. And for the most part, this is very expected. I have not been buying a lot of tech stocks lately, and if I have, I've been holding them very, very short term. Okay. Pink sparkles, it would be on the SPY, it would be right here. That's a good question. It would be somewhere pretty close to where we're at. Here, let me just try this. Try this on for size.
It was also interesting, Roger, this morning on your pre-market watch list, none of your longs were in tech.
That's what I said. That was, yeah. I think there might have been one that was related, but you're right. There was no tech. So either somewhere right here where we're at, literally like somewhere real close to where we're at. I'm assuming that the 15 is somewhere close by, or and I'm lazy. I could just do it on the other chart right here where I have the 15. Here. Yeah, there's the 15. So either on the 50, probably the 15, but more likely than not right here. Somewhere right here. See the deviation? See the deviation? See the deviation? That band works both ways. Upside overdone, downside overdone. It just happens to happen a lot more. It happens to happen faster on the way down than on the way up. That's all, which is a good thing. You get the pain out fast. So you guys see my levels here? Here, we already passed the 8-day. We're headed to the 15 without any bounce. And here's the standard deviation, the 1.5. Once we start getting here, we're going to start getting pretty close, in my opinion, because I don't see, unless the background unless the context changes, what would have to happen? Volatility would need to continue going above 20, Um, a lot of things would have to happen. Volatility would have to go above 20. Put the call ratio would have to completely shift. The bond market would have to go lower. The number of stocks declining for the first time would actually have to get like to a nice, healthy, something we haven't seen. But honestly, I would be looking at the bond market for direction, and the bond market is kind of bottoming out here. So I'm not really seeing the bond market taking it in the chin. So I'm not making more out of this than it is as of right now. As of right now, I'm seeing this. Yes, it is, Glenn. Yes, exactly what it is. Actually, I'm going to announce that right now. So yeah, we're kind of going between here and here, kind of going between here and here for the most part. That's a natural rhythm of the market, and I'm not really seeing anything. This is just a much needed correction, in my opinion, as of right now, and it's still kind of early in the day. A lot of things can happen. Okay, third thing I wanted to share with you. I got a lot of things to share with you. So because you guys like those bands, what I did was I added them to Stock Fetcher. I haven't done them to everything, but I've done them to the 90-day high and lows right here. I don't know why we made them yellow, Matt, but here, if you highlight it, you could see them right here. That's the 8-day. That's the upper. That's the lower right there. The yellow, blue, and purple. Purple is the 8-day. Blue is the lower band, and yellow is the upper band. So, for example, Tesla. Ignore the green. That's just a 200-day line. I don't know even. I'm going to take that off. But you could see the yellow and the blue and the purple. Those are the bands. It's the same thing. And I put it in the A line, or I asked them today to put it in the A line members area, and I asked them to put it in the VIP room members area. So you guys should be able to get it. Okay? So you guys will be able to have it for TC2000, for Thinkorswim, and for Stock Fetcher. So I don't want to hear any nonsense from anybody that you don't have it. They're nothing like Bollinger Bands. No. They're based on actual price, not on some numbers that mean nothing. Okay? Did you know that, Terry, did you know John Bollinger never traded before in his life? He literally told T-Bus he's never traded before in his life. Okay. He's an analyst. He's not a trader. Never traded before. So if you guys want to use indicators made by guys who are not traders, good luck to you on that. It's the funniest thing, actually. Okay. 1 second.
That's amazing, Roger, that Bollinger never traded.
No, he never traded. Never traded. What's even more amazing, here's what's even more amazing. He created Bollinger Bands for commodities in the early to mid 70s. Okay.
That's what I remember. Yeah.
He never, wait, now here's the interesting part. To his credit, he has never once said they work on stocks. He has never once said, I tested them on stocks. He has never once said, I made them for equity in the equity markets. He made them for commodities. He's a commodity analyst. He doesn't have anything to do with stocks. Okay. But over the last 40 years, Bollinger Bands have become very popular stock trading tools. Where the guy who created them is telling you, I never made them for the stock market. What are you guys doing? But what do I know? No, T-Buzz, and he's an analyst. He's not a trader. He's never told anyone he was a trader. He never took credit for being a trader. He never pretended to be a trader. He was an analyst. John Bollinger is an analyst. He's not a trader. And T-Bus told me when he met him in Las Vegas, he assumed he traded. And Bollinger told him, I don't trade. John Murphy doesn't trade either, but he wrote the best technical analysis book ever created. And here we are. So just keep these things in the back of your minds, right? Okay. All right. Yeah, that's how I started our live class when we had 100 people, Chris. I started my live class by explaining that 99% of the stuff that you read will not work for stocks. And then I explained what I just explained here in greater detail. Kane and I did that in greater detail. And I actually showed people a book that somebody wrote before and how that book got a different name. A technical analysis for the futures market is now technical analysis of the financial markets. But, you know,
Roger, I think we lost your audio.
I think when you touch your microphone, the sound went out.
Can you hear me
Yeah,
now?
there you go.
Oh, okay. You guys could hear me now. Okay.
Yes.
Just want to make
Yep.
sure you guys could hear me now. Okay. So yeah. Before there was a book called Technical Analysis. Here, let me show you guys. This is amazing. This is a big conspiracy. Okay. Look at this. Look. Technical Analysis of the Futures Market. Murphy. Look. Do you see this? Technical Analysis of the Futures Market. Technical Analysis. Oh, look. It's now here's technical analysis of the futures market. Here's technical analysis of the financial market. Do you think they changed the book? The
Just the
same book.
cover.
I have both.
Yeah.
I have both books. This miraculously became this. So now everything he wrote for the futures market, people buy because it's the financial markets, and stocks are obviously financial markets, right? Yeah, right. Now, do you think everything here works for stocks? Because that's what you're being sold. I don't have to go far. I'm going from here to here, from here to here. Same book, same book. I have both of them, the same book. It's pathetic, but that's the world we live in, folks. That's the world we live in. It's funny, gurus get bad names, but these guys don't, and these guys are like totally misleading the world, you know? Anyways, okay. The next topic I wanted to cover, I have a lot of little topics today that I need to cover. I've been giving you guys a lot of these small cap stocks, like I was about to say Nike. Nike's definitely not a small cap stock. Like for example, XPON, this stock right here. Okay, for example, just so how do you trade these stocks? How do you trade these stocks? So remember yesterday, I had a session yesterday, and I explained to you that these stocks don't have these baby stocks that I give you. That's a good point, Cyrus. These baby stocks that I give you, you got to trade them totally differently than you trade large cap stocks. So, for example, you know how in large caps I use VWAPs. Here I don't use VWAPs. Here a VWAP is already it's too late. You have to be very aggressive with these stocks. So the way you trade with these stocks is this. Okay. Here, let me go back to my other screen. You're trading the 5-minute charts, which means you have the 5-minute ATR here. The 5-minute ATR on XPON. Here, daily ATR. The daily ATR on the stock, the average true range on the stock is 22 cents. That's how much the stock moves daily, okay? Daily. If you see a move, back to 5-minute. If you see a move on a stock like this, when it's moving obviously more than 22 cents, what you want to do is you want to use the 10-day ATR as your stop loss. Once it reaches your stop loss, profit target, once it reaches your profit target, you put your stop loss, you raise your stop loss at break even. So here's how it would work, okay? Let me just draw a picture for you. It'll be easier if I draw a picture. Okay. Are you long, short? Are you doing anything, Matt?
We're nothing right now.
I figured so, but just wanted to check. So the ATR say is 0.25 cents. Okay, that's the ATR. All right. This is how much the stock trades every day. The stock is popping. It's popping. It's like $3 now. Okay, $4. Don't on your initial stop loss. Don't bet more than 2 ATR times 2. Your initial. Put your profit target at put one profit target at 1 ATR and the other target at 2 ATR. Okay? This is the 10-day ATR. All right. So here's 25 cents, here's 50 cents, and here you have 50 cents. Okay? So 2 times ATR for your stop loss, then put one stop profit target, 1 ATR, and another one, 2 ATR away right here. Okay. Then as this comes up, you take as soon as you hit the first profit target, you raise your stop loss to break even. As soon as you hit your second profit target, you start raising this level by 1 ATR. Okay, I'm going to go through that exercise again. So this is the stock. It's moving 25 cents a day. This is 25 cents, okay? Per day. That's the 10-day ATR. I'm drawing with my mouse, so I don't have one of those, and I don't like those things. Okay? So the stock is here, right? It starts breaking out above this. It's now like moving $1, 2. It's on our watch list in the morning now. Now we're like, okay, if it goes above $2, you buy it. So it moves 25 bucks a day, 25 cents a day, but now it's at $2. So this stock is hot, right? So you put a 50-cent stop loss, 50-cent stop loss away from your entry. 50-cent stop loss, that's your 2 ATR. You put a profit target at 25 cents, at 50 cents, because ATR, I'm using the ATR number, okay? Once your first profit target is hit, you raise your stop loss to break even. As soon as your second profit target is reached, you raise your stop loss by this much to the first level. So what you're constantly doing is you're constantly taking profit, raising your stop, taking profit, raising your stop. You don't sit there like a sitting duck and wait for the price to go from $5 back to 22 cents. You don't do that. Okay? You guys understand? You take, and where do you, okay, so where do I find the ATR? Well, here's your ATR right here. So daily ATR, the daily, not the 5-minute. It depends, Frank. I would do them mentally. I would just write down what the ATR is. See, if you have the ATR right here, you got your numbers. This times 2 is 44. 44 cents away from your entry would be what? 132, 133, something like that. Boom, that's your stop loss. Profit target, add 22 cents to this, then add 22 cents more, put them as your profit target, sit back and watch. Now, I just did that live in my head. To input all that, for me, would probably take another 15 seconds. I'm trying to be really conservative. Maybe it'll take you 25 seconds, but you should be able to do that. And it's right here. Your ATR is right here. You always have your 10-day ATR. And remember, you got your, what am I doing here? There we go. You got your daily and you got your 5-minute, and I have my this is actually on 5-minute, but this is on daily always. So yeah, I have my ATR right there. You're welcome, B-Rad. So happy that, yeah. No, you don't do this for large caps. Now, remember yesterday, this is a good question. Remember, Tim, I don't know if you remember or not, but yesterday when we were all here yesterday, I explained to you the difference between trading small caps, trading large caps, and trading indexes. Do you remember I explained it in gross details? And I told you very specifically, all the stuff that we talk about for small caps has no influence on large caps. All the stuff we talk about large caps have no influence on small caps or the indices. All the stuff we talk about the indices has no impact on small caps or large caps. Why? And I explained that too. Because liquidity levels are different. Small caps have no liquidity. Large caps have okay liquidity. Indexes have huge liquidity. Liquidity determines this. You know, if you have a small plane, you get this much turbulence. If you have a large plane, you get less turbulence. If you have a parachute, you're just going to get turbulence. It works the same way. Hopefully you learned what I just said. Indices are ETFs. Okay? So you got to understand, everything I talk about when I'm talking about small caps has absolutely no, I mean, folks, these don't even have options. I mean, these stocks are driven by retail traders. Large caps are institutional traders. You're playing a completely different game. When a small cap goes against you, look, if there's no more buyers, retail can run out of money fast. Bye-bye. No more for you. It'll go back down to zero. Something has to consistently keep it up. A large cap stock is different. A large cap stock, you always have someone buying it. There's levels of buyers. All right. So I'm gonna go through this again for anybody. So where do we enter? We enter above the pre-morning high, which I give you every morning. All you got to do is set an alert. I give you those levels. Once you're in, and again, you don't have to manage it this way, but this should give you some idea of how to manage it. The first thing you want to do is preserve capital with these small caps. The winners will take care of themselves. You want to, because they move a lot. And the ones I tell you about move a lot. Okay. I only give you the ones that are like doing some crazy stuff. Like they like, in order for it to be on my watch list, it has to be like the largest volume ever, in history. So it's, I do use why would you say something like that, Mickey? I'm right here. What makes you say I don't use Thinkorswim anymore?
I think people see you switching between TC2000 and Thinkorswim, and sometimes that gets confusing to them.
I got I got TC2000 here. I got TC2000.
But that's what, Roger, don't let this derail your discussion.
It's all TC2000. I mean, it's all Thinkorswim.
Yeah.
Okay. Yeah, I use a lot of Thinkorswim. All right. So that's how that works. So very, very quickly, let me just go through that again so you guys see it. And then I want to talk about credit spreads and debit spreads. And then Kane and I will have something. Scott, you got to call customer service.
I got
Cam
it,
will hook you up.
Raj,
yeah, thank you.
Stop
thank you,
looking
sir.
at the chat, buddy.
I'm going to close it. That'll keep me out of trouble. That's it. So here's how you would do it. Let me just show you again. Let's erase this, okay?
Yeah, let's erase.
Yeah, right. I mean, geez,
like a Jackson Pollard.
Right. Soon I'm gonna have to get one of those pens, those writable pens. I don't like those screens. They give me the willies. The screen, those it's too much tech for me. But anyways, so the stock has been doing this forever. All of a sudden, Microsoft is thinking of buying it. Volume is like this, where everyday volume is like this. The stock is now up here, okay? If after open, it trades above the pre-market high, which say is right here, that's when you enter. How do you manage the position? What's the daily ATR? What's the 10-day ATR on the stock? It's 22 cents. Every stock has a 10-day different ATR. ATR is the average true range, the volatility. Here's your 1 ATR right there. Okay, so 2 ATR is your stop. Okay. 1 ATR profit target and add another on top of that as a second profit target. So let's just say we got in here. Here's your first profit target. Here's your second profit target. That's your stop loss right here. Okay. As soon as this profit target hits the first one, you take your stop loss and you move it to break even. That way, if all hell breaks loose, you made some money. Mm-hmm. Defense, not offense. Then second profit target gets hit, you move your stop loss to the first profit target. So as you keep rewarding yourself to the upside, you keep raising your stop loss. Yep. You don't you can't be a sitting duck with these small stocks. They can literally move from $50 back down, from 0 to 50 back down to zero. Because it's just a big fat auction. That's all it is. Mm-hmm. Okay. So I've been getting questions. I have two types of people. I have a person who understands exactly how we do debit and credit spreads, and we have a group that just can't get it. And most of the people, to fairness, most of the people that email me about this, they're like, Roger, I know you've explained it like a million times. It's not you. It's me, but can you just please explain it one more time? So I want to explain that, okay? And Kane, if you want to add to this, please do. So let's just take L, okay? Here's a stock. Let's just see how liquid it is. We could work with this. So let's just, let's take something a little more liquid. How about how about Palantir, okay? All right, here we go. That's a lot of liquidity here. So let's say I like Palantir for whatever reason. I like Palantir, and I do like Palantir. But let's say I really like Palantir. Okay, really, really like Palantir. And here's the first thing I'm going to ask myself: Do I think it's going to go up a lot, or do I think it's going to go up a little? If the answer is I think it's going to go up just a little bit, kind of like continue grinding up like this and not really break out, then I'll probably look for a credit spread. On the other hand, if the stock is like right here and it's the perfect A line, basically the stock is like right here, perfect A line, right here, right there, right? Or maybe like IBM looked earlier today, where I think it's going to go a lot more. And I do think IBM is going to go a lot more, but I just don't think it's a good time to be buying large caps right now. But let's just say I think it's going to go a lot more. We're going to do a debit spread. So the first thing you got to ask yourself, do you think it's going to go up very little? And do you think it's going to go up a lot? That's the first thing you got to ask yourself. The second thing you have to ask yourself is premium to risk over 50% or is it less than 50%? Why is that important? Because we want to make sure when we buy a debit spread that we're paying less than 50% in comparison to the spread. We want to have a 2-to-1. If we, on the other hand, if we are selling a premium, we don't want like to take in a nickel and risk $1, which is what most income traders do. We don't want to do that. We don't want to be at a 20-to-1. We want to be at 40 to 60%. So oftentimes when I look for a debit spread, I'm like, man, look how expensive this is. Boom, right away I'm like, hey, I could just do a credit spread. So the two things you should be asking yourself: stop doing the way the books teach you how to do it. Stop doing it the way the guys that do it who pretend they're income traders for a living tell you to do it. Listen to what I'm telling you to do. Ask yourself two questions. Do you believe the stock has more upside? And there's a mechanical way to figure that out based on what we talked about at the start of this class, using the 8-day, how deviated we are, the Bollinger width. We've had classes on this many, many times. How far it is from the overextended it is from the 8-day EMA. And then we have, is it really overextended? Is the price right here? And I think it's going to go up here. Well, I'll probably do a debit spread. So debit spread, how far do we usually go on a debit spread? Debit spreads, you want to go about 9 days to 16 days. You don't want to go too far out. Why do you not want to go too far out on a debit spread? Because when you do a debit spread, you're trying to get a double whammy. You're trying to save your money, but you're trying to get the option that you sell to help offset the cost of the option that you buy. Out of the money options that are expiring soon are really good things to sell because they're going to expire soon. You understand? And they're expensive. So you get a double whammy. So that's why we start at delta of 0.50. So let's go 9 days out. Okay, let's start at 47.6 delta, 270, and we'll see what do we get for 270, 250? 466 versus 335. How much is this? Well, it's about $1.10. How much is the spread? It's $2.25. $1.10 is less than 50% of $2.25. So that's okay. If I had to pay $1.45 or $1.55 and my upside was $2.25, do you think I would do a debit spread or do you think I would do a credit spread? I would be doing a credit spread. So a lot of times I find a credit spread by trying to do a debit spread. Basically, I'm like, oh, I like this stock. I think it's going to go up, right? Okay, how far is it extended from the 8-day AMA? Oh, it's pretty extended. Okay, maybe I shouldn't be buying it right now. What about options? Ooh, that's an ugly premium. I have to pay $1.60 and my upside is 225. Hey, it's expensive and it's overextended. That's a good credit spread. Do you understand what I'm saying? The choice of whether it's a credit spread or debit spread is not by me trying to figure out where the stock is not going to go. That's how you get 1 to 20. I want to get a 1 to 1. So what I do is ask myself those two questions. How far is the stock from the 8-day EMA? And what is my risk to premium? Those two things will tell you if it's a credit spread or a debit spread. So let's just do a couple of examples, okay? All right. Let me just ask folks, are people understanding so far what I'm saying, Raleigh?
Yeah, great comments right here, Roger. Excellent comments.
Okay, so let's take a look at a couple. And I don't know if you guys have noticed or not, but I don't like to prepare very much before. I like to do everything live because when you do things live, unforeseeable situations happen which you cannot prepare for, and those usually make the best examples. That's usually how I like to roll. So I like to do everything live. So I'll just pick a stock. How about General Motors? Okay. How about General Motors? Okay. Nice stock. A little extended, but not too much. You can kind of go either way here. Either way here. So let's just see 9 days out. Let's say I want to do and I think that the stock can come up all the way up here, right? That's what I think. So let's just take a quick look. If we do a debit spread on this stock, let's say we go 16 days out, we could do 59, 60. Well, we have a dollar spread here. We have a dollar spread here, okay? And we have about a 50 cent here. We can go either way. Not a big deal. We can go either way. In this case, this is an actual trade that's currently in the weekly cash flow program for a credit spread, which I think is going to go, which I love how it's looking. I have no problem with the stock, but I just wanted to show you. See that? Now, am I expecting a huge move from here? No. If I was expecting a huge move, I would do this is GM. I don't expect GM to make a big move. I would do a debit spread, but I wasn't expecting a big move, so I did a credit spread. Okay? Don't let option volatility and premium decide if you're going to do a credit spread or a debit spread. Make sure the stock has to decide what you're going to do, and don't play the whole game of I'm going to try to do a spread of where it's not going to go. It will work your way 19 out of 20 times, and then the 20th time you're going to be paying for all those 19 times and then some. Okay, so how about I know a good one. JP Morgan. That's a great example, actually. That's a great example. So interest rates. The bond market has been doing this, right? Remember this, this is not the first time I'm showing you this. Now we don't know where it's going to be. Obviously, financial stocks got excited. So JP Morgan rallied, and now it's just kind of getting choppy. So JP Morgan, Matt, are you calling me?
Yeah, I am.
Okay. The guy's sitting right there and he's calling me. I'm like, what are you calling me for? All right. So JP Morgan, I should have picked up the phone. That would have been funny.
That would be.
I mean, the guy's sitting 6 feet away from me. So you see the move we just had? We've been moving up quite a bit. I just don't think the stock has that much more to it anymore. So, okay, that's strike one. And I think if the bond market starts coming down, financials may also potentially cool off just a little bit. They have the most relationship. So let's take a look. Let's go 0.50 delta, 312.50. That's $2.50 here. Okay, what's the spread here? It's about $1.33. It's a little bit on the high side. It's a little bit on the high side here. It's not that cheap. Okay, it's not that cheap. And if this thing just comes up just a little bit more, just stays in this area, This will start cooling off. So I would probably be doing a credit spread on this. Right now, most of what I would be probably doing is credit spreads because I'm not expecting big move. The market is, as I said, is a little, it's not as overextended as it was 2 to 3 days ago, but it's still a little overextended. If I thought this was going to go to the moon, I would be doing a debit spread or just a call. So I'm going to say this again to you guys really, in a very, very, you should write this down. First, you need a good stock. Okay? If you don't have a good stock, forget about doing don't just come in there and say, oh, I'm going to do a debit or a credit spread. All right, do you have the right stock? Okay, do you have the right stock? Number two, very, very important. Do you think the stock is going to, and what do I mean by do you have the right stock? Does it have liquidity? Because if you don't have a liquidity, we can forget about this conversation already. Does it have earnings? You got to have the right stock. Is the Paula? We've had sessions on this. No earnings, good liquidity, so there's not a huge spread. So that the spread between the bid and the offer is not as wide as the Grand Canyon. I don't care about valuations. Not too deviated from the 8-day moving average. All the things that I've been telling you guys day in and day out on this show. Okay, so. Is the stock overextended? Does it have volatility? Does it have volume? Does it have rhythm? Does it have institutional sponsorship? All that stuff. And if somebody isn't clear on all that, what all that stuff means, send me an email. I do respond, roger@rogerscott.com. So let's continue. So we got a good stock. Okay, we got a great stock. Okay, cool. Is it overextended? No. Premium. Are we getting? Is it pricey premium? Am I taking in more than 50%? Or I can get this for like 30 cents on a dollar. If I can do if the premium is cheap, if implied volatility is cheap, and volatility peaked at 17, so it's getting towards 20. But if I can get it at 2 for 1, I'm going to buy that thing. I'm not going to sell it. But assuming I think there's more upside left. But if the implied volatility is high in the market, and if the market's correcting, and if I think the stock is topped out and maybe just has a little bit more to go or just going to stay where it is, I'm going to do a credit spread. I'm going to get a big fat premium of over 50 to 60%, maybe 60%, 65%, like in JP Morgan. And if it goes against me, okay, I'll lose out of $1.35 or $1.40, I'll lose $1.10. But I'm not going to take 7 cents and lose $2.43. You understand? Which is what most of you would do. Because you would sell the premium that's not here, right here. You will sell the premium that's right here because most premium sellers want to sell premium where they know it's not going to go. And it won't go here. They're right. But 93 or 95% of the time, and then that one time, 1 in 20, it's called the baboom rule. And the baboom will hit against you. And then you will lose those 19 times plus 20th and then some. It's called walking up the stairs and falling down. Okay, how do you decide to decide? So as I'm setting up, we're going to do a little class with Kane. Kane has something he wants to share with you, something he hasn't shared in a while with you. And we're going to do this right now. Kane has been very patient and very quiet. How's your speaking voice, Kane?
Should be okay. I've got some water over here, so I should be good.
Now, before we continue, does anybody have any questions? I don't have. I closed the chat.
Yeah. So
and
Roger,
Raleigh's going to ask me. So go ahead.
Yeah, there are a lot of questions here, and I'm not quite sure if we have the time to address these because there's a lot of very, very specific questions on. Tell me again how you decide the size of the spread, for example. For a credit spread, are you selling short strike at ATM? Now I'm confused. Show me the credit spread again. So there's a lot of this. I think people need to basically absorb. What is your example of credit spread on JPM? If you want to pull that up and take a look at that. So these are the kind of questions that we've got here, Roger, and I think it probably would take more time, or people should re-review, this presentation to move next.
Well, you should. I've answered each and every one of those questions twice during this presentation. Mm-hmm. Here's what you do. You rewatch this presentation, and tomorrow I'll go through this again. Because again, I know people have problems with this because I'm constantly getting emails from really nice people are like, I know you've gone through it 100 times, but can you do it again? So I'm gonna do it again tomorrow. I'm gonna do it again. This is something that people need to pick up. I know for me it seems easy because I've been doing this for a very, 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 very long time. Like this is the only thing I have in my head. You take this out of me and I'll be empty-headed. All right.
And
So, Kane,
the other thing I would say
yes,
is this,
yes,
Roger,
yes.
and I think this is normal. You with 30 plus years trading the markets are able to, you've got an inbuilt nuance to what you see in the market. And what people are looking for are binary answers. Well, exactly what is that level and how much does it have to pull back? And that's natural, but these are not something that you can code. So a lot of what Roger's doing is he's using his eyes, he's using experience. For example, Roger, when you said, do I think this stock's going to move higher? A bunch of questions. Well, how would you know? How would you know? How would you know? How would you know? And so it's fair to ask those. But what Roger explained, and here's what's important. Roger, for those of you that are new, Roger shares this with us on a daily basis, his selection criteria for what constitutes a good stock. Number one. And number two, he shares with us whether it's grinding or whether it's set to break out. Those are the things that he's referring to. And that's what I'm saying, Roger. So many of the questions were posed that way.
Yeah, I'll go through it again tomorrow. I'll go through it tomorrow. Today we have Kane, so I want to spend some time with Kane talking about his programs. But I'll go through it again tomorrow, and I'll spend like the first 15, 20 minutes clarifying it again. But before I do, there's one thing I want to make a big deal about. Anyone, and I'm going to tell you I'm going to tell you again. Anybody who tells you trading, maybe if they're scalping 3-second charts, but I'm talking like trading daily bars. If anybody tells you that there's just 3 rules you need to know, or just follow this line, or something like that, just run the other way as fast as you can. Trading, real trading. And again, if you're following signals, you don't need to know any of this stuff. You just need to take the signal. But if you want to learn to do this yourself, okay, if you want to do it yourself, Michael, I did put it on a worksheet, a 6-hour worksheet that's called Options Bootcamp. And I did it 3 times, and it's in the VIP room. And I did that 8 years ago, Michael. So I thought about you 8 years ago. All right. So 60% of trading is mental. It's between your ears. 30% of trading is context. 10% of trading is the stuff that you guys really, 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 really want to learn. Bless you, Kane. Bless you. So I'm just going to repeat this again. 60% of the puzzle, 60%, not 40, 60, is right here. 30% is the edge, and 10% is the stuff that you guys think is really important. The more you will learn, the more you, and if you disagree with me, that's okay too, because the longer you will do this, the more you will agree with me. Kane, would you agree with me on those numbers?
Oh yeah, absolutely. Absolutely. I think a lot of people, they get hyper focused on execution, and that's like the last thing you need to worry about.
Yeah. 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 So and I'll talk more about this, but I'm telling you that all that stuff that you guys think is absolutely crucial to your trading success is like cherry on top. Okay? All right. Let's go through this, Kane. This is going to be very exciting. This is Kane, I believe this was one of the first things you launched here.
This was my absolute first product. Yeah, my flagship.
Yeah, and boy oh boy, let's see. Do we have egg all over our face, or do we have beauty? From 124 to 916, there's been 119 live trades. Okay, that's great, more over 100. And wow, look at that. He has a 71.43 win rate on options, producing a 30